Material Transfer Advanced Concepts. After completing this lesson, you should be able to describe separation of physical and financial flows, describe cost accounting for internal material transfers, explain consigned inventory internal material transfers, explain how additional transfer order charges are used, and describe fulfillment of transfer orders using order management. The first section will describe how supply chain financial orchestration manages all the trade relationships between internal parties belonging to a large corporation spread across geographies. This diagram depicts how Oracle Fusion Supply Chain Financial Orchestration is a configurable application that manages all the trade relationships between internal parties belonging to a large corporation, typically spread across geographies. The supply chain business flows supported are customer shipment, global procurement, and internal transfers. In this example, Vision Operations sources supplies from the manufacturing facility in China for electronic components. The goods are shipped directly from China to the warehouse in the United States. Upon receipt of goods, the ownership transfer is documented and accounted through China, Singapore, and US. The financial flow is independent of the physical movement of goods. You can monitor the execution of the financial flow between the entities. The user interface gives you the status of the financial orchestration transactions. Next, we'll describe how Oracle Fusion Cost Management has the infrastructure in place to trigger costing and accounting of internal material transfers automatically. This diagram illustrates how Oracle Fusion Cost Management has the infrastructure in place to trigger costing and accounting of internal material transfers automatically. It does this by processing physical and trade execution events for IMT transfers and creates accounting. It also processes physical and accounting-only return transactions. It reports gross margins for intercompany trade flows, reports in-transit valuation for goods in trade in transit, and supports intercompany intra-organization trade accounting. The automated process performs a sequence of steps in real time. These include interfacing internal material transfer transactions such as transfer order shipment from inventory management and transfer order receipt from receiving. It also interfaces trade events from supply chain financial orchestration based on the agreement. The receipt accounting processor processes receipt transaction and creates relevant intercompany accruals if invoicing is enabled or books intercompany payables. And also, the cost accounting processor processes the shipment transactions and computes the intercompany cost of goods. This screenshot depicts that in supply chain flow, when goods are transferred internally between organizations belonging to different business units, the execution of the financial flow is initiated automatically once the ownership is transferred from the seller to buyer. The title transfer may happen when goods are shipped or received, depending on the financial flow. Raised on physical transaction triggers the execution of financial from the physical movement of goods. Physical flow is not impacted by the execution of the financial flow. Regarding transfer price, the Oracle Fusion Supply Chain Financial Orchestration Framework provides a transfer price for the creation of a transfer order for transfer of goods between internal organizations. Once the transfer price is calculated, Supply Chain Financial Orchestration calls the tax applicable on the transfer price. An example of costing and accounting. This diagram will help us better understand the costing and accounting of transfer events. In this example, Vision Operations sources supplies from the manufacturing facility in China for electronic components. They're shipped directly from China to the warehouse in the United States. The financial flow is independent of the which is routed through Singapore. Goods, the ownership transfer is documented and accounted through China, Singapore, and US. In regards to cost distributions, there are generally two broad types of trade accounting. That with intercompany invoicing enabled, intercompany invoicing enabled. Oracle Fusion Cost Management supports costing and accounting for internal material transfer transactions, both forward and returns. It also facilitates streamlining accounting when physical flow of shipping goods financial flow. Cost management also helps in providing better visibility of internal markups in intercompany trade flows by automatically tracking profit earned on internal transfers using a separate cost of element of type profit in inventory. In this slide, when profit tracking is enabled, the profit earned at each leg of the transfer is automatic. For example, received in Vision Operations, B3, at a price of $56 segmented into profit earned by Vision China business unit. The Singapore distribution is at $21, and then the original cost of the material, which is $31.25. This diagram shows how, as part of trade accounting, cost management facilitates costs from the origination point to the last point in the internal material transfer flow. In our example, Vision applies from the manufacturing facility in China for electronic components. The goods are shipped directly from China to the warehouse in the US. The ownership transfer is documented and accounted through China, Singapore, and the financial flow is independent of the physical movement of goods. Execution of the financial flow between these entities at every leg of the trade flow and profit from the previous leg included in the inventory. The results of our example would be as follows. Goods in China at a cost of $31.25 are shipped to Singapore distributions at a transfer price of $. The internal profit of $3.75 is included in the inventory cost of $35 Singapore distribution, which is finally transferred to the destination Vision operations at a transfer price of $56. Goods are received at Vision operations at a landed cost, which further breaks down to an original material cost of $31.25, an internal profit of Vision China included in inventory at $3.75, and an internal profit of Singapore distribution inventory at $21. This screenshot shows cost accounting for internal material transfers. Oracle Fusion Cost Management provides the ability to analyze the gross margin earned from margins separately. Improved visibility of the cost of goods sold is provided to facilitate better decision-making. The Analyze Product Gross Margins user interface enables the cost accountants to gross margin earned from both internal and external sales. Our next topic will describe how consigned inventory is supported by IMT and how the transfer also takes place in IMT. This diagram shows how consigned inventory can be transferred across inventory organizations or within inventory organizations without forcing a change in ownership. Organizations transfer consigned inventory between locations while having the inventory remain consigned. Consumption rules can be configured to determine whether the transfer between two inventory locations triggers consumption. A transfer between inventory organizations is known as inter-orders. When a transfer is executed between organizations, consumption rules determine whether it results in a change of ownership. Our current screen shows how consigned inventory is supported for internal material transfer flows in a consigned state when it is transferred from a source organization to a destination organization. Consigned inventory consumption is determined by consumption rules. Once consumption occurs, the consumption device will be generated and reported to the supplier. The Manage Consumption Rule user interface is used to determine which transaction types trigger consumption. In addition to transaction types, rules also support attributes such as owning party of the consigned inventory, from inventory organization to inventory organization, or from sub-inventory locator to sub-inventory locator, and so forth. Next, we'll describe how IMT enables you to route shipments of items on an internal material transfer request through order management. The internal material transfer process offers organizations an options to route shipment of items on an internal material transfer request through Oracle Fusion. The routing of an internal material transfer shipment through Oracle Fusion Order Management is a configurable business rule in the Manage Supply Order Enrichment Rules user interface. Business rules that run at the time of supply creation and set the value of the order management shipment flag. During transfer order creation, it evaluates the OM shipment flag attribute to determine if the transfer order line should be directly interfaced to Oracle Fusion Shipping or Fusion Order Management. Details of fulfilling transfer orders through order management include automated orchestration of transfer orders across fulfillment systems, fulfillment monitoring of transfer orders and external sales orders, and the ability to prioritize shipments across transfer orders and external customers. Order managers can prioritize and reallocate supply across internal material transfers and external sales orders using the utility function within order management. Oracle Fusion Order Management has out-of-the-box integration with inventory to receive inter-orders. Existing capabilities of order management for managing customers' sales orders apply to internal material. This allows us to perform orchestration of orders across fulfillment systems, monitor workbench actions, process planning for identifying exceptions, and to be able to use the source organization's business unit from transfer orders to more accurately at the source. Order management provides internal integrations to enable scheduling, inventory reservation, and shipping of internal material transfer orders. Users can search and identify internal material transfer orders using the source document type attribute within the order management workbench. This screen shows how we can use order management to check supply availability, what-if analysis, and reallocate supplies across orders. The order manager can utilize the check availability functionality within Oracle Management supply options and perform what-if analysis for scheduling internal material transfer orders. This also provides capability to prioritize orders and reallocate supply between one or more transfer orders and sales orders. Analytics for internal material transfers. Our next section discusses the feature for substituting items transfer orders. Configuring your supply chain to allow substitute items can help alleviate demand against your on-hand quantities. You can automatically substitute requested goods during the pick release process. Once configured for an organization, all transfer order and shipment lines created in that org will default to allow item substitution, but you can disable this behavior on a line-by-line basis as needed. Alternatively, if the organization, you can enable the substitution function line by line. Both transfer order and shipment lines now also have an attribute against the originally requested item to indicate a substitution has been used. Additional transfer orders against transfer order lines when transfer orders are created using the supply or the supply request file-based import spreadsheet template. As transfer orders are created in inventory and shipping, the shipping charges flow into the shipping system, and from that, like any other shipping cost. These shipping costs will be picked up directly from the shipping when the shipping inventory transaction is passed into cost management. Shipping cost types are used to identify charges, and they need to be set up using the Manage Shipping Cost Types setup task. Charges added using the web service or the spreadsheet import are always entered at the transfer order line level, but charges added directly in the shipping module can also be added to the shipment or a transfer order shipment. The additional transfer order charges will be processed by cost management when the transfer inventory transactions to costing process is run, passing the inventory shipping transaction into costing. Shipment, container, and line level charges will be passed into cost management. Container level costs will be prorated down to the transfer, providing a cost per shipment line. Shipping charges cannot be charged once the transfer order line has been shipped and interfaced into inventory. This section will describe all the additional IMT setup tasks such as Manage Supply Chain Financial Orchestration Transfer Pricing Rules, Manage Supply Chain Financial Orchestration Flows, and Manage Item Cost Profiles, as well as others. For reference, this table discusses additional transfer setup task. The first column lists the setup task name, and the second column is the description. So the setup tasks include things such as managing supply chain financial orchestration transfer pricing rules, managing the supply chain financial orchestration flows, managing item cost profiles, elements, managing default cost profiles, managing supply order defaulting and enrichment rules, manage the shipping cost types, manage like freight cost types, and managing items. The next section will describe IMT reports such as in-transit inventory valuation report, consumption advice report, transfer order status report, and print cancel transfer order report. The in-transit inventory valuation report shows you goods that are in transit. Consumption advice report is used for reporting or communicating consumption of consigned inventory to the transfer order status report will give us visibility into the status of open transfer order. The report's available in two formats, requisition view and transfer order view, and also the print cancel transfer. This allows for mass cancellation of transfer orders which are based on an entered selection criteria. The report can either be printed off to allow viewing of transfer orders eligible for cancellation. You can also run the report process with the cancel option turned on to cancel the selected transfer orders. In this brief demonstration, we'll review the transfer price and tax on a transfer order. We'll begin our navigation by going over into our application, and we'll navigate to Supply Chain Execution into Inventory Management. From our task, we'll navigate into the function for Manage Transfer Orders. Here, we'll pull up an existing transfer order to look at the data. I'll search. And we can see here is that resulted from a back-to-back order type. In this case, the one I've queried is closed. We can see the requisitioning business unit, the creation date. Down below, we have the information for the transfer order, including the item, the fulfillment status, which has been shipped and received, and it shows this was between source organization 002, which is Atlanta, and a destination of Chicago warehouse. Our delivery date information, quantity is also a link for the backing requisition. You'll note here we also have information for our financials, including the transfer price of $14 US, applicable tax of $1.31 for non-recoverable, and then finally the total transfer price of $15.31. cancel return back to my application. And we'll go back to summarize. In this lesson, we should have learned the following.